$33.4 billion for AES. I thought the megadeal was dead, Maya.
It's dead for software, but call it AI infrastructure and suddenly private equity finds its checkbook. GIP and EQT are buying data centers, not just a power grid.
Oh, come on. You're dismissing their entire renewables business just to fit the tech narrative? Though Ecolab swooping in for a server cooling company does prove your point.
See? $550 billion in deals this month alone. So who else is overpaying for the AI halo today? The rundown. $10.8 billion for an insurance underwriter. I do not care how good Beazley's cyber portfolio is. Zurich is paying a massive premium just to look busy.
Oh, come on, Maya. It is not just looking busy. Cyber is the only growth engine left in commercial lines. You pay up for the engine.
You overpay for the engine. Analysts are calling this market disciplined selectivity. This looks like plain old exuberance to me.
I will take exuberance over the dead zone we had last year. Aggregate deal values just hit $550 billion for the month. The animal spirits are waking up.
Speaking of animal spirits, nothing screams raw primal energy like corporate uniform rentals and oil changes.
The glamorous side of M&A.
Cintas is buying UniFirst for $5.5 billion, and Monomoy Capital is taking Jiffy Lube for $1.3 billion.
I actually love the Jiffy Lube deal. Private equity loves cash flow you can set your watch to. Monomoy is basically buying an annuity of forgotten oil changes.
Sure, but the Cintas deal is just classic consolidation. Squeeze the synergies, fire the redundant middle managers, print cash. It is definitely better than the AI desperation plays we are seeing. Did you see Netflix buying InterPositive?
I did. AI filmmaking tools.
I read the footnotes on their last funding round. It is mostly just a prompt engineering wrapper, but Netflix is terrified of being left behind.
Everyone is. Corporate carve-outs are emerging as the defining trend of 2026. Companies are stripping down their operating models just to unlock capital for tech investments. Even Ecolab is doing it.
Wait, Ecolab? The industrial cleaning guys?
Yep, they just swooped in for Cool-It systems, data center cooling.
Okay, that is actually smart. Data centers run hot. AI needs servers. Servers need cooling. That is a great pick and shovel play.
See, you love a good narrative when it makes sense.
I just want to know what they paid, which they conveniently left out of the press release. Typical? Just like Nuburu suddenly reviving that stalled 70% acquisition of Techni.
Oh, the drama there. A dead deal walking suddenly springs back to life. Somebody gave up a board seat behind closed doors, I guarantee it.
Or a massive earn-out concession. We will find out when the proxy drops, but all this scrambling for AI and infrastructure is just the appetizer.
You're talking about the $33.4 billion elephant in the room.
I am. GIP and EQT teaming up to take AES private.
The biggest energy buyout we've seen in years. We're going to tear apart the financing structure on that monster right after the break. The big one. $33.4 billion. I had to read the headline twice this morning. GIP and EQT teaming up to swallow AES whole.
You sound surprised. We knew these infrastructure giants were sitting on mountains of dry powder. But yes, seeing them actually deploy it on a single target is something else.
It is the ultimate signal. Aggregate monthly deal values just hit $550 billion globally. That is nearly double where we were a few months ago. The deep freeze is officially over.
I am not buying the whole exuberant market narrative just yet.
Oh, come on. $550 billion. The bankers are finally taking their fleece vests out of storage?
Sure, the volume is up. But look at what they are actually buying. The analysts are calling this disciplined selectivity. I call it a highly targeted panic buy.
Panic buy? They are buying AES. It is a massive, diversified global power company. It is the definition of a safe, long-term infrastructure bet.
No, it is an AI play, Nate. Pure and simple. Look at the asset footprint. AES has a massive pipeline of renewables specifically positioned near major tech hubs. GIP and EQT are not buying a traditional utility. They are buying the power cord for the next generation of data centers.
Okay, I will give you that. The AI infrastructure land grab is getting completely out of hand. Did you see the whispers on Wall Street this morning about Ecolab?
The sudden swoop for Cool-It systems?
Yes, a water hygiene and chemical company buying a data center liquid cooling firm. It sounds like a Mad Libs deal.
It makes perfect sense when you realize every single corporate board is terrified of missing the AI wave. Companies are aggressively simplifying their operating models right now. They are doing massive carve-outs just to free up cash to buy anything that touches a server rack.
Exactly, and the infrastructure funds are playing the exact same game, just with bigger checkbooks.
Which is exactly why I pulled the early filings on the AES deal. EQT and GIP are paying a massive premium, but if you look at how they are structuring the joint venture, they are already laying the groundwork to spin off AES's legacy fossil fuel assets. They want to strip out the old stuff and exclusively keep the clean energy feeding the tech giants.
That is actually smart. Strip the house down to the copper wire to feed the algorithms.
Spoken like a true former banker.
Hey, I own my past. But seriously, this AES buyout puts every other major infrastructure and electrification player in play by tomorrow morning. The ripple effects are going to be massive.
Assuming the regulators actually let anyone else buy anything. Outbound US M&A just surged 155%, and Washington is definitely noticing who is buying all these sensitive power and tech assets.
Which leads us perfectly into the cross-border drama blowing up the industrial space right now. Voices. I keep seeing this exact phrase in all the morning strategist notes today. Disciplined selectivity. They're desperate to convince us that this $550 billion month is totally rational and not just the start of another wild boom cycle.
Disciplined selectivity is just what you put in a pitch deck when you want to sound like the smartest guy in the room while writing a blank check for anything with AI in the name.
Oh, come on, it's actually discipline this time. Look at the deal structures. We're seeing these massive corporate carve-outs everywhere. Companies are aggressively simplifying their operating models just to unlock capital for tech. They're selling off the slow growth divisions to buy the future. It's a strategic rotation, not just a spending spree.
Nate, outbound US M&A is up 155%. You don't get a 155% surge from careful selective rotation. That's a frantic scramble. Buyers are absolutely terrified of missing the AI infrastructure wave.
Okay, fair. The infrastructure scramble is completely unhinged right now. Did you see the whispers on Ecolab swooping in for Cool-It systems?
Yes, the industrial cleaning company buying a data center cooling firm. It makes total sense if you squint really hard and ignore everything else they do.
Wait, really? The soap and sanitizer guys are buying server cooling tech? That's hilarious.
Liquid cooling is basically just fancy plumbing, but it proves my point perfectly. Everyone's stretching their core mandate to grab an AI halo. Although, if you want real corporate drama, Nibiru just suddenly reactivated their 70% acquisition of Techni SPA after it was totally stalled out.
The Italian deal? I'd love to see the unredacted term sheet on that one. Somebody definitely caved on valuation behind closed doors to revive that zombie transaction.
Or somebody realized they needed the tech yesterday and finally stopped fighting over pennies.
Speaking of fighting over tech, we need to talk about what happens when Washington wakes up to this massive cross-border surge.
Especially with sensitive AI assets flying overseas. If you think the regulators are just going to wave this through, I've got a bridge to sell you. Spill the tea.
Okay, but we have to talk about Nibiru dragging the Techni deal back from the dead.
Oh, the zombie acquisition. I thought that 70% stake was completely off the table.
Everyone did. The deal was stalled out, completely cold. Then suddenly they reactivate it this week. You know, somebody made a massive, embarrassing concession behind closed doors to get that term sheet signed again.
Or they just looked at the market and panicked. The analysts keep talking about this new era of, quote, disciplined selectivity. I am calling complete BS on that.
Wait, really? You think buyers are just throwing cash at the wall again?
100%. Look at the frantic scramble for AI infrastructure. Ecolab just swooped in for Cool-It systems. Ecolab, the chemical and water treatment guys, suddenly they are a sexy data center cooling play.
That is actually smart, though. Data centers are basically massive ovens right now. Someone has to keep the servers from melting. As a former banker, I would pitch that synergy all day.
Sure, it makes sense on paper, but it feels desperate. Everyone is carving out and selling off their boring divisions just to scrounge up cash for anything with AI in the pitch deck. Even Netflix is buying InterPositive. AI filmmaking tools? Oh, come on.
See, I love the Netflix move. It is pure Hollywood narrative. But you are right about the carve-out frenzy. Companies are stripping down to the studs just to afford a seat at the AI table.
Which brings us back to Nubaru. I bet we check the footnotes in 3 months and realize they gave away the farm just to get the Techni deal revived.
Spoken like a true skeptic. But if you want to talk about giving away the farm for power and infrastructure, we need to look at what just happened in the energy sector.
Are you talking about the $33.4 billion elephant in the room?
Oh, you know I am. GIP and EQT just dropped an absolute bomb on the power grid. Tomorrow's radar. Tomorrow morning, every utilities banker is going to be waking up thinking about the AES deal. $33.4 billion changes the weather. We're going to see a massive infrastructure land grab before the weekend.
Oh, come on. You're sounding like a pitch deck again. Nobody is grabbing land blindly.
You don't think this sparks a wave?
I think we see corporate carve-outs, not a free-for-all. It's disciplined selectivity. Management teams are stripping down their operating models just to afford AI infrastructure. Look at the Ecolab deal.
Right, the sanitation guys swooping in for Coolette Systems.
Exactly. A hygiene company buying data center cooling. That's how frantic the AI scramble is getting.
It actually makes sense. Server farms get hot, but the real thing to watch tomorrow is Washington. Outbound U.S. M&A just spiked 155%.
Regulators are absolutely going to start circling those cross-border tech transactions.
Which brings us perfectly to Netflix buying InterPositive. If you work in Hollywood, you should probably be terrified right now.